Well, good evening, folks. It's Joseph here again. Welcome to my Go Live. It is December 12th, 2025. It's about 9:15 p.m. Eastern Time here in Canada, Hamilton, Canada, that is. I hope all of you are doing well. Sorry, I had a bit of a delay. I had to attend another meeting earlier and it just went longer than I thought. But yeah, no, I'm glad that made it here. And I just wanted to welcome all of you who are watching this live or even on the replay. So first and foremost, I want to welcome you to my episode 13. This is episode 13 of my financial literacy. It's been 13 weeks that I've launched this episode, which I'm very, very proud of. I didn't think that I'd make it to 13 episodes, but yeah, no, I definitely will continue on as I promised myself to try and help and educate and actually inspire those who are interested in this topic of financial literacy. A little bit about me. My name is Joseph. I am from Hamilton, Canada, born and raised in the Philippines. We migrated here with my parents and siblings August 1980, and pretty much grew up here. I am a retired IT professional from the banking industry. I served 34 years of my career in one company, which I'm very proud of. I am a financial advocate, financial coach, self-taught in financial planning, retirement planning, and at the same time, I'm a active investor in real estate and stock market. So, yes. So for those of you, again, welcome, and for those of you who are going to be watching this on a replay, by all means, those of you who are again watching, if you have any questions, comment them below, and I'll keep an eye on the chat window or the comment section, excuse me, and I'll answer them on the fly. So in today's topic, I thought about because I did a go live in regards to various investments here in Canada and the US, and somebody just texted me and asked me the question about, can I do a little bit deeper dive on TFSA, which is tax-free savings account here in Canada, which is the same equivalent of Roth IRA in the United States. Okay, they're both very similar investments. So yeah, that's what I wanted to do. That's what I want to talk about. Just maybe spend maybe 15-20 minutes of your time to explain this, because this is a very I would say hot topic for Canadians and Americans, because now these days a lot more people are investing because they want to create that extra income stream for their future and their retirement, right? So I'm very, very happy to say, though, that in looking at some of the statistics that I saw somewhere that 80 million funds were invested by kids, or by I would say kids that are I guess teenagers or kids that are not married or whatnot, but kids from the age of 18, maybe I would say to the age of 25 or so. There has been some statistics that kids are now investing into the stock market, which is a really, really good news to hear, because investments and financial planning even are not even taught in school, right? So it's great to hear that a lot of kids are now investing $80 million worth, are investing in the stock market, which is good to hear, because obviously they are actually investing for their future, and the message is getting out there, right? So that's why it's very encouraging and very inspiring to hear that some of financial influencers, or some of the financial gurus are actually spreading the word and actually making a difference in terms of educating the public about investments, right? So yeah, so I want to just dig deeper on TFSA, or Roth IRA. So what is it? So I would say that, the TFSA is it's really not an investment. It's actually just an umbrella. And in that umbrella, or you can call it a bucket, right? It's a bucket. In that bucket, there are three investment inside that bucket or an umbrella in Canada, that is, right? So for the TFSA, there are three accounts or investments. It's called savings account, which doesn't grow much in under the TFSA, and then we have GIC, which is guaranteed income. That's another form of investment, and then the other one is you can call it investments, whether it's mutual funds or ETFs. So there's three types of buckets inside the TFSA, and those three buckets are actually called investments, right? Investment accounts. So TFSA, tax-free savings account, really is something that the government, which is, it's called registered account, which means registered just means that it is regulated and supported by the government itself. Okay, so that's the difference between registered and non-registered. So registered, being TFSA, is really an account that provides you with tax-free savings on any growth or interest earned in that investment. Okay, anything of interest or growth. So if you put in, $1,000 into your investment account, let's say GIC, or you put it on mutual fund or ETF, exchange traded funds. You put in $1,000. That's after tax money, of course, right? Because you've earned that money, or you got it from your work or your salary, and you invested that $1,000 after tax money, and you put it in a TFSA. If that $1,000 grow to, let's say, $1,500, another $500, that $500 is tax-free. Okay, it's tax-free. So it's a great investment account to have, because that's where a lot of people will save a lot of money tax-free. Okay, in terms of the growth, right? Now, a lot of people, use the mutual fund slash exchange traded funds as stock market investing, right? Now, there's also the GIC, guaranteed income, but certificate, right? GIC is guaranteed income certificate. The problem, I wouldn't say it's not a problem. The GIC is really more for people that are a little bit more conservative, and people that actually are retired because they want to protect their money, rather than putting it in on our cash account in the bank, where inflation pretty much beats your dollar for dollar sitting on your bank account, right? So it is best to have it invested, so at least it's actually beating the inflation currently. So highly recommended to invest on TFSA. I would say that's the number one go-to investment for every Canadian, whether you're earning a lot of money or whether you have a low salary. TFSA is the best vehicle. Now, there are also other investments, RRSP, which is Registered Retirement Savings Plan, which I will go to on another episode. But that's really more for high-paying jobs or people that are earning high salaries, right? But for people that are actually not on a higher tax bracket, because in Canada we have what we call a marginal tax system, where for every level that you move up the bracket, it's a higher tax. That's why they call it marginal tax. So for Canada, people that are not earning much of a salary, like medium to lower income, I would say that the TFSA is the best investment vehicle. Okay, not the RRSP, because it just defeats the purpose. The purpose of the RRSP is to lower your tax bracket. But if you are already in a low tax bracket, then there's no point of investing in your RRSP. Now, I'm not saying that you can't invest in the RRSP. You can definitely, if you're in a low income bracket, I'm just saying your first go-to investment is the TFSA. Now, once you've reached the limit on the TFSA, then obviously you can move on to RRSP. Now, but before you even move on to RRSP, there is another investment here in Canada only. It's called First Home Buyer Savings Account, FHSA. Now, I would use that as a second vehicle for those people who are on a lower tax bracket, because that is a hybrid of RRSP and TFSA when it comes to investment benefits. Okay, so first go to recommendation is TFSA. Open up a TFSA. As long as you're 18 years old in Canada, you can open up a TFSA. And open it as soon as possible, even for those kids who just turned 18, and then start investing as early as you can in the TFSA. So like I said, TFSA is the first go-to investment for those who are on the lower tax bracket, and then FHSA is their secondary. And then if they have more to invest, if they have more money to invest, or let's say they won something, or they were awarded the bonus or so, then you can also invest in RRSP if you want. Okay. So the other thing that I want to talk about TFSA is that, it's very flexible, right? TFSA right now, obviously, if you were to open a TFSA at the age of 18, you will be allowed to contribute $7,000 that first year, and then it grows every year, right? Every year, the government changes the contribution limit, but it's $7,000 right now. So as soon as you open up a TFSA, for those people that are 18 years old, you can put in up to $7,000. Now, you cannot go over that contribution limit, because otherwise you're going to get taxed 1% every month for any overage, right? So as much as possible, you want to stay below $7,000. Now, with the TFSA, you can also withdraw anytime you want. There's no penalty of withdrawal. So let's say you have $10,000 in your TFSA and you want to withdraw $5,000 this year, then you can withdraw $5,000 this year, but you cannot pay it back or put it back the same year. You have to wait the next calendar year to put back that $5,000. But the next calendar year, there will be another $7,000 contribution limit added to that. So in total, you will have $12,000 contribution room for the following year. So there is no penalty, but the only penalty really is that you cannot pay it back the same year. You have to wait until the next calendar year. So one of the things, and this is a tip for all of you, one of the things that I do, if you need TFSA, if you need that money for such emergency or whatnot, and if you can plan it in such a way so that you don't really lose out on your investment, is what I do is every December, I pull out whatever money I would need to spend, and I will pull it out in December. Like, let's say I withdraw $1,000 in December, and then next month, which is January, the calendar year, I can actually pay it back. The 1,000 that I withdrew, and plus the 7,000 for the next contribution limit, right? So really speaking, you've only lost 1 month of interest or growth, right? So as much as possible, if you can do that, that's the best strategy, because you're not waiting for a few months to pay it back, assuming that you have the payment to pay it back. But what I do is I plan it out in such a way that every December, if I need to take out anything from my TFSA, if I'm short on anything, emergency or anything like that I need to use, that I think that I will need, I take it out in December, and then I pay it back in January. If you can, plus the contribution limit, right? So that way you take advantage of having it invested for 11 months of the year, right? So remember, compounding interest when it comes to investment, compounding interest is the best way for you to double or to triple or quadruple your investments. Okay, the longer horizon that you have when it comes to investing in the stock market, or whether it's mutual funds or exchange traded funds, ETF, the longer you have, the better it is, right? So that's why there are also strategies in terms of which TFSA asset class allocations that you need to invest in. So that's another episode that I can also go through with you if you're interested in that. Let me just check. Sorry, let me just check the comment section. If there are any comments, okay, no, that's good. We're good so far. So in terms of, where am I now? So yeah, so I mentioned about the contribution limit, right? And so what is TFSA used for, right? Another question that I had was, what can they use TFSA for? Well, you can use it for anything. Actually, a lot of people had asked the question, can I use TFSA for my emergency funds, or can I build my emergency funds in a TFSA account or umbrella? Absolutely yes, right? So a lot of people, you will hear a lot of influencers say, you must have emergency funds first before you start investing. Well, you know what? Since TFSA or Roth IRA are very, very flexible, that you can withdraw anytime you want, there's no penalty, you can actually use that as your emergency fund. So if you can invest, start investing in your TFSA and build up 3 to 6 months worth of your cost of living, right? 3 to 6 months, then you're actually using the TFSA for multi-purpose, right? One is your emergency fund, and number two is investment in case you need for anything else that you want to support your goal, whether you're buying a new car, buying a house, going to travel, you can use the same vehicle, which is the TFSA. So that was actually a good question, because a lot of people are saying, well, what, for me to build up my emergency funds, it's going to take a while. Well, if you have the TFSA or Roth IRA, you're actually doing it for the same purpose. So you don't have to create another place for your emergency funds. You can just actually invest it in TFSA. Once you build up your emergency funds up to 3 to 6 months worth of your cost of living, then you're good. You just continue on investing for your other goals, right? So just keep that in mind. The other thing that I want to say is that you don't get tax. Okay, so when you withdraw from your TFSA, there is no tax. There is no tax. And imagine that if you are able to grow your TFSA up to the maximum amount, I mean, obviously that depends on your age, but let's say, for example, for those people who have opened a TFSA since the beginning, since inception, since when it was available, you can actually invest up to $102,000 per person. That's the maximum, right? So if you haven't contributed to TFSA ever since the TFSA was introduced by the government, you can actually put in $102,000 to meet the maximum contribution limit. Now, for next year, January, another $7,000 will be added to that, so it'll be $109,000 total by January. Okay, so one of the things that you really, really want to make sure that you are not penalized by going over the contribution is that you have to check with, in this case, CRA in Canada, right? Canada Revenue Agency, CRA. You have to check with them every March of every year to make sure that you have the right total value of your TFSA contributions. You have to check that. Although the financial institutions that you invest in, so let's say you invest with a bank using a TFSA, or you invest on a stock market, or whoever the brokerage is, they will actually, whoever the bank is or financial institutions, they will actually send your contribution totals to CRA. And typically CRA they don't get it until February, end of February of the following year. So that's why I'm saying that always check with CRA before you contribute by March of that same year, and then it will tell you how much total you have and how much room you will have. Okay, but at the same time, you also have to track your contributions, and you also have to track the room that you have on a spreadsheet somewhere, so that you know as to how much you are allowed to contribute. Now, CRA is there to make sure that you don't get penalized for going over the contribution on a yearly basis, because they hold the the amounts from all the financial institutions. So you have to rely on them. They're actually the gatekeepers of the TFSA contribution, right? So you just have to really make sure that the CRA has the same records or same total that you should have on your spreadsheet, right? So very, very important. Please make sure that you are not going over the contribution limit, because otherwise you can get penalized 1% every month for going over. And then lastly, I want to share is that TFSA, the mutual funds and the exchange traded funds inside that investment account that I talked about, compounding interest is the key to everyone's success. Because like I said, the longer of a horizon you have, so let's say when I'm talking about horizon, meaning number of years that you have, the more powerful the compounding interest works, right? Because your money, your value just compounds in a very favorable manner for many, many years. So imagine if you're saving something for retirement, the horizon is about 20, 30 years. So if you can actually start investing now and leave it there for 20, 30 years, you'd be very, very surprised how much you'll have at the end. And a lot of people, depending on how much they contribute and how often they contribute, they would be in millions if they invested from 25 to 30 years out. Okay, it would be in millions, right? And again, it all depends on how much you're contributing and how often you're contributing. Okay, but yeah, that time horizon, the longer it is, the more beneficial for you to save up for your retirement. But yeah, and TFSA is not only just for retirement, of course, right? It's also you can also use it for, if you want to buy a car, if you want to buy a house, you want to, save up for a trip. You can actually use a TFSA because you can always manage the flexibility and the returns on your investment pretty aggressively, and it would be on your favor. So that really is all I wanted to cover. And I hope for those of you who are actually watching this on the replay as well, by all means, comment your questions below, and I can definitely get back to you as to, if there's anything I can answer for you in regards to TFSA/Roth IRA. I know we have some viewers that are from the Philippines. Excuse me. I'm not so sure if there's anything comparable to tax-free, but I know for a fact that Pag-ibig MP2 is also, I believe, it's tax-free, but there's some limitations on that. But yeah, I mean, I would definitely invest in Pag-ibig MP2, and I know it's government regulated as well. But to me, that would be my go-to, and I wouldn't. I would always renew because once you withdraw, then it resets, right? So I would definitely say that keep Pag-ibig MP2 going as long as you can, because it definitely can save you tax-free. So anyway, that's all I really wanted to share to all of you. I want to just say, Merry Christmas and Happy Holidays to all of you. I will try to have another episode next week, but after that, I think I'll call it off for the year, and maybe use next week as my last episode for the year, and then start again in early January. So for those of you who continue to watch me and support me, I thank you so much for your continued support. I hope you are learning something from my content and from whatever I'm sharing. And again, if there are any questions in regards to financial planning, retirement planning, investing, or even the digital business opportunity, by all means, reach out to me or comment below, and I'll definitely get back to you. So that's it, folks. May I wish you good night, good morning, good afternoon. May God bless you all. Bye for now.